Welcome to the Strategies to Reduce Occupational Fraud in Small Restaurants session. Now I'll turn the microphone over to our presenter, Angel Ortiz.
Good afternoon. I'm Dr. Angel Ortiz. Thanks to join me in this symposium, research symposium. I'm currently an assistant professor at the University of Puerto Rico at Calle campus. My research interests are mainly related to forensic accounting, auditing, and occupational fraud. And I like also to work with communities regarding ways to enhance the entrepreneurship spirit among them in Puerto Rico. And let's start. The title of my research is Strategies to Reduce Occupational Fraud in Small Restaurants. My chair that I appreciate a lot to her is or was in that moment Deborah Natres, Dr. Deborah Natres. Thank you. I know that you will see this video later, so thanks for all your support during this process. Next slide, please. Well, currently, according to the Association of Certified Product Examiner, 5% of the revenues of business is lost by employee fraud, which also another term is occupational fraud. So every dollar of sales, for every dollar, business lose 5 cents every time because employees are getting the money from their organizations. According to the study in 2015 and now recently 6 months before, which was after this study, the Association of Certified Product Examiner identified that the median loss of businesses related to occupational fraud is approximately 154,000 per year on average. So it is a lot of money losing for the business environment. So what is the problem statement? Well, the general business problem is that some small business owners experience significant losses from occupational fraud. The specific business problem is that some business owners of small restaurants lack strategies to reduce occupational fraud. Based on this need, what is the purpose of this study? The purpose of this qualitative multiple case study was to explore the strategies used by some business owners of small restaurants to reduce occupational fraud. The population of this study consisted of business owners of 3 small restaurants located in San Juan, Puerto Rico, which is a small island, a U.S. possession in the Caribbean, who have strategies to reduce employee fraud in their business. What is the significance of this research? The significance of this study was the potential identification of successful strategies to reduce employee fraud in the small organizations. The reduction of employee fraud may have an impact on decreasing financial losses. As I mentioned, on average, business lose 154,000 per year. This study may be of value to business leaders pursue successful strategies to reduce occupational fraud and avoid financial losses. The theory or conceptual framework used for this study was the fraud triangle developed by the psychologist Donald R. Garcia in 1953. The central concept of this framework is that individuals commit fraud by 3 psychological stages. The first stage is pressure, the second rationalization, and the third one, opportunity, that we will explain in the next slide. The next slide, please. This is the conceptual framework, the fraud triangle. In the fraud triangle, this psychologist, which is Garcia, studied prisoners of white-collar crimes in early 50s. And he discovered that individuals of white-collar crimes committed fraud having these three psychological stages. The first one is financial pressure or need in other texts mentioned. Financial pressure, people need something. They need food, they need for their children, they need something for them, and they need something. That's the first stage in order to commit fraud. Then after that stage, the individual rationalize and says in his inner voice and say, why I cannot commit fraud and take the advantage of my position to get a personal benefit. It is fair, it is justice for me, I work for other people. That's basically the second stage, rationalization. And the third stage, according to this framework, is the opportunity. The individual see that there's an opportunity to commit fraud in the organization or the business and decided to commit fraud. So basically, considering these three stages of the conceptual framework is a great foundation for the study to see the strategies that these three small business owners mention as effective to reduce employee fraud. Next slide, please. What is the research question? The research question was, what strategy do small restaurant owners use to reduce occupational fraud? To answer this question, we follow the following procedures. First, we develop a semi-structured interview by asking open-ended questions. Then we validate those answers or responses with a member checking technique for data accuracy. Finally, we review also company documents with the responses of the participant to have a methodological triangulation. In terms of the documents, we see the human resources, even incident reports, manuals, or accounting records, difference or adjustments that they have due to missing inventory or cash due to employee fraud. In terms of the participants, as I mentioned, were three business owners that have experience using successful strategies to reduce occupational fraud. How we determine these three participants? Well, in Puerto Rico, there is a society, a certified public accounting society, that also have a connection with the Association of Certified Fraud Examiners nationally in the United States, which is ACFE. That's the name of the association. We talked with those leaders, and they suggested three participants that successfully have knowledge to reduce occupational fraud. That's the way that we select our sample. Then, once that we have the responses and follow this procedure, our data analysis consisted to identify trends and codes. Then we identify common themes. Finally, we analyze that data with the conceptual framework, which is the fraud triangle, and we did methodological triangulation with documents and literature to ensure or validate the responses of the participants. Next slide, please. What we found. First, that the main strategy to reduce occupational fraud in small restaurants is owners monitoring. Who is the most important figure there? The owner. So the more in all the participants mentioned how important is the owner figure to continue monitoring the employees to ensure that they follow the process and do not get advantage of their position. In terms of owner monitoring, they mentioned surveillance system, which is common, cameras. Why? Because that limit the rationalization and opportunity psychological stage, as I mentioned at the beginning of the triangle of fraud, that the individuals, if they perceive that there is an opportunity, they are more willing to commit fraud. So in terms of owner monitoring, a theme that continuously they mentioned was surveillance system, cameras, and family members, if they have not the availability to be in the store or in the restaurant all the day, who are the best to continue that monitoring? Usually family member. And the participant constantly mention the spouse or their children or the child or something in some of the cases. So the first strategy is owners monitoring. The second strategy that have the highest mention in terms of themes was segregation of duties, specifically in the cash register. The three participants constantly mention how waiters usually do the orders in the system, and then when they collect the final ticket from the customers, they goes back to the cash register, change the order or eliminate the order and get the money and put it in their pockets. So for them, it is very important that the cash register be managed by a person different from the waiters, who are the ones that are putting the ticket and entering the orders. Usually, the owners usually handles the cash register. So for them, the segregation of duty is very important. And this segregation of duties, you could say this is common because according to auditing, all organizations should have an adequate segregation of duties. However, remember that in small businesses, the resources are very limited. So the owner who do not have enough budget or resources to have plenty of them. But in this case, they usually says that the most important segregation of duty that you have to take step in this is the cash register. So this is the great study and it's consistent with the literature. The other thing is to continually audit sales transactions, in which, because most of the employee fraud is related to cash. So that's a way that the segregation of duty could help. Let's move to the third strategy. The third strategy, it is analytical procedure. What is analytical procedure? Analytical procedures is basically looking for fluctuation in numbers. Every time that you see a fluctuation, it is a flag for you. If every day you go for a street and you see a sign and one day you don't see it, something is wrong, something is missing. So that's a flag for you. The same occurs in businesses, that owners usually try to see the deviations of what they expect. And I will tell you an example that two of them mention constantly. For them, they know that a specific amount of inventory in terms of food or beverage are equals to a specific amount of sales or revenue. So if they notice that more inventory was consumed and is not proportional to the revenue register at the cash register or in the books, something is happening. And what is good happening? Well, that the waiters could steal in the money. That's one of them. Other is that the employee are stealing the inventory. For example, beverage, alcohol, or certain ingredients that are very expensive in their businesses. So that's the way that with that fluctuations, for example, they say with this amount of inventory, I can have 10 serves. And I'm seeing that only in revenues, I have 5, the half of them. So something is missing. And what they do usually with analytical procedure, that's a way that they can detect if employees are misusing or are taking the inventory or other assets of the organization in their benefits. So that's consistent also with the literature in terms of auditing, that most of the auditors at the beginning of any planning stage, they have to do a flux analysis. So to identify possible misrecording on misstatement of financial information. So similar, this happens with the inventory and cash and revenues in the case of small businesses. So it's very, very curious. And the fourth finding is communication. Communication with the employees that if they found that they are deviating from the procedure, they have to put a memo. They have to also communicate that inventory is missing, because that's the way that the employees are perceiving that they have been watched. And if we remember the triangle of fraud, if the employee perceives that they have opportunity, they are more willing to commit the fraud. But if they continuously are hearing that the owner or the administrator or the manager is telling inventory is missing, something is happening, we are looking what's happening, they are going to perceive that they have been monitored. And that the way you limit the psychological stage of the opportunity phase. So that's a great also strategy, and is consistent with the conceptual framework and the literature. So in summary, we have 4 findings in this study to reduce occupational fraud, considering that small restaurants have limited resources in order to have an internal control system. And the 4 findings were owners monitoring, segregation of duties, mainly in cash register, analytical procedures to see flags in the information, and finally, communication with the employees to ensure that they have been watched by the owners. Next slide, please. As I mentioned, the interpretation, we found these 4 strategies. And these strategies, according to the participants, are ideal to reduce employee fraud. You never will eliminate it, but at least you can reduce it, okay? What is the limitation of this finding? Well, these participants of my study were limited to the San Juan area, which is the capital of Puerto Rico, and it is a specific geographical area. And as we know, in qualitative research, the transferability of the findings depends on what the standard uses decides. So we cannot say that these findings are transferable to other geographical areas. However, external uses based on my research, my protocol could decide whether this finding could be transferred to other geographical areas. In terms of my recommendation, this study helps business leaders to enhance the internal control system in order to reduce employee fraud. That's the first thing. And also, if they follow these strategies, they could reduce losses associated with this problem. In terms of social change, for me, and also based on the study, areas with high incidence of fraud, the citizen and the community lose their confidence in the institutions and the businesses, and people usually start leaving the area. So it is important in order to, as agents of social change, that we can reduce these type of things, mainly in the business. And following these findings, we can reduce this incident in businesses, basically to reduce employee fraud. And this helps in different ways. The first one is that we reduce business failures because organizations are losing money and could fail. The second one is that we can decrease unemployment because, again, if organizations are losing money, they may need to do budgetary adjustment in order with employees because they don't have enough resources. And finally, we can reduce the criminality rate because that's the way that community members will have, again, confidence, trust in the institution and the businesses in the community. So this is very positive if we can follow these strategies, and also have a social impact in our communities. And basically, this is the findings of my study. And something that I want to share is that I realized, or I did this study after just a natural disaster. And for me as a researcher was very interesting because nobody knows when a natural disaster comes. So I have the IRB and then start doing my research. It was just after was a hurricane in Puerto Rico, which is where we did it, Hurricane Maria. And we in the island were without electricity for almost 4 months. And the question for me, some of them is, how do you have a surveillance system if you don't have electricity? And they reinforce again the importance of owner monitoring. Every time that they have customer inside the restaurant, the problem usually is in the kitchen with the employees to ensure that they don't get the inventory. And they have been with flashlights in the kitchen. It was very interesting, some of the answers. And for me, this is not part of the presentation, but for future research, it could be interesting to see how to handle occupational fraud in natural disasters area, in which you don't have electricity, you don't have communication, internet. So, and some of these participants tried to talk a little bit about that. I mentioned it in my dissertation, my doctoral study, but it was not the scope of the research. But in terms of researcher, I'm very satisfied that I had the opportunity to test some of this information just after a natural disaster, which many researchers will not have the opportunity in their life about that. So it was very interesting for me, and how to implement some of these strategies in areas that you don't have resources, electricity, or cash register functioning, which is very hard for them. So basically, these are my research. If someone have a question about that, or have any comments, I open right now.
Dr. Ortiz, did you have any final remarks, or those were them? And we can just check for questions.
Well, for final remarks, basically, this problem is, so the problem of employee fraud is worldwide right now. And there's another problem, which is corruption also. So for me, every nation or every organization who needs to address this problem worldwide in a holistic way, and depends on multiple variables, but how we can reduce it, that is the scope of our study here, of my study here, is something interesting, because in small businesses, there are very small literature about employee fraud, because they have very limited resources to handle, have an effective internal control, as the ICPA, American Institute of Certified Public Accountants, have in the United States, for example. So this study brings the opportunity to other small businesses, specifically small restaurants, to start seeing alternatives with limited resources to address this problem and enhance their businesses and the community. And as a final remark, for me, this is very important for everybody, and it's the significance of this study. And now again, for the question, thank you.
John, we can see your video, but if you want to go ahead and unmute yourself and ask your question to Dr. Ortiz. There you go.
Hi, Dr. Ortiz.
Hi.
Found your study interesting. I was just wondering about the potential application to other geographic areas. You started to address it in your closing remarks. But having worked on 6 continents, I have not been to your country yet, but maybe someday. But do you see the potential to apply this, say, in Central America and Mexico and South America, perhaps even in other continents, Africa, or what are your thoughts on that?
Well, in terms of transferability, I have been at least in other continents also, so I have the opportunity. I believe that it's transferable mainly because most of the small organizations are family institutions, either in Central and South America, which are very common. I used to work in Colombia, so I have a little bit experience or background in that country, South America. And also when you go to Europe, you will see a lot of family business, mom and pops, that is also very common. So one of the interesting thing is that the scope of this research was not family business, but you could perceive that most of the participants indeed were family business at the end. So I believe that it is very transferable, mainly in the South America, also Europe, and maybe in India and other countries that the family business is very common. So that's the way. In terms of culture, one of the things that could be a limitation is that some cultures could have difference in one of the findings, which is related also with family members.
Okay.
Because not all cultures necessarily are confident that the succession handles the monitoring or their business. For example, that my brother monitors my business. Some cultures do not, maybe are not trustful in that. Maybe they want that the son or the daughter monitors, but not my brother or my sister, which is different, or my nephew. So that's something that we cannot measure here, but I believe that there could be a difference in that finding depending on the cultural background of every country. The other thing, it is, again, of culture, how in that culture, maybe in Asia, I don't know, I do not have experience in Asia, but how they perceive as an individual that someone is monitoring you in the kitchen, for example. So I believe that that could be maybe a limit in transferability in certain cultures. But I believe that it is transferable for every background, either in the United States, because even though you don't have family, if the owners or administrator continually monitors the employee will feel that they are being supervised every time with a camera or something. Now you have applications that they are seeing the employees with their mobile, and the employees will limit or restrain to commit the opportunity phase of the occupational fraud. So for me, it's very, very interesting that yes, that will apply. Something that one mentioned that is not part is a strategy to not do nothing. I know that person, I remember that participant mentioned, sometimes you know that the employee is stealing to you, but he's so or she's so important for the bar or for the restaurant, that it is making a lot of money for the organization, but you know that sometimes take something of the tips or do something that is not correct.
Yeah.
And cost benefit, they said, I'm not omnipresent. I could be in every place every time. But if the person still maybe says $10, it's okay. I'm earning $100 at the end. So that's something that came to my mind like a flag and says, this is common. I'm talking outside with people that it is not part of the study. Some business owners say sometimes the strategy is to do not do anything, even though people are stealing to you. But that was not the scope, right? But it's something curious that's a concept, no cost benefit strategy. So it's different, but that's something that could apply in certain circumstances.
Okay,
Okay.
well, thank you.
Thank you also for your interest in this topic.
Thank you so much, John. And thanks again, Dr. Ortiz. Do we have any other questions for our presenter today? All right, well, I'm going to thank you all for joining us.